Howdy there, folks. Welcome into today's video. A lot to get into in this video here today. We got to talk about right off the bat, the most important stock you never heard of. We're going to talk about it here at the start of the video. The stock is crashing. I mean, it is absolutely getting obliterated right now, and it's one of the most important stocks in the stock market. And like, hardly anybody even pays attention to this stock. So I want to talk about this one. What's going on there? Is there an opportunity to buy? I think there's some lessons we can learn from what's going on with that stock, those sorts of things. We're going to talk about Tesla stock. Tesla stock fell massively again. Stock's down well over 50% this year. I want to talk in depth about Tesla, my opinions on it, what's going on there, why is the stock down big again, my 2 cents on that. Got to talk about auto sales in general. There's a major change that's coming for Apple that affects their entire business model that's happening right now. Got to discuss that. There was a stock I bought today. There was also, we're going to talk about portfolio in this video. We're going to talk about a stock I'm way down the rabbit hole on researching right now. I want to share that stock with you guys here today. And then we're going to talk about where's Santa at. And we're also going to talk about a scary layoff that was just announced. So a lot to get into. I might start doing this at the top of my videos that cover a bunch of different subjects, because like sometimes I do a 20-30 minute video and it's on a bunch of different subjects. So this at least lets you guys know kind of what the subjects are. So appreciate everybody joining me as always. Thanks for being here. Thanks for being subscribed. Okay. So first off here, CRM, Salesforce, one of the most underrated stocks in the entire stock market. One of the most not talked about stocks unless you're super into the market out there. Stock down another 7% plus here today. This stock's down almost 50% this year. Incredible move for an incredible company and one of the darlings of Wall Street of the past number of years, nonetheless. And so this stock just continues to get hit here, okay? So this is an interesting situation because I'm looking at Salesforce and I'm trying to figure out this might be a great opportunity over the next 6 to 12 months to add to this stock, right? And buy this stock for the first time ever. I've never owned this stock, and build out a really nice position in a company that's a proven business model that has great profitability. Now, there's a lot of things kind of working against this stock right now. This matters in a significant way. The Slack CEO, Stuart Butterfield, is now leaving Salesforce after the deal was announced like 2 years ago, roughly, okay? And this is an interesting situation because Butterfield announces, he's leaving, right? Or it's announced he's leaving. But this comes just after the co-CEO, Brett Taylor, announced he's stepping down last week. So this was something that was kind of like, oh boy, what's going on at Salesforce? Like now 2 folks in big leadership positions are leaving this company, all announced within about a week of each other. That definitely gives you some cause for concern as an investor of this stock, right? And looking at it and like, wait, what's going on here? Well, is Benioff, is he doing something here that maybe some moves that these folks aren't agreeing with? Is it nothing like that, right? And like it just creates concerns as an investor and trying to figure out where this company's going, right? Now, that's the minor issue. Here's the major issue, okay? And I think this is why this stock is actually selling off huge. You got to dig a little deeper sometimes, okay? So Stuart Butterfield announces he's leaving the company, right? Well, here's the deal. Stuart Butterfield likely owns over 3 million shares of Salesforce stock. Now, if somebody leaves a company, right, they're much more likely to start selling that stock and sometimes even selling it aggressively. And so I would call it a high probability that Stuart Butterfield drops a ton of shares, if not his whole position, but a ton of these Salesforce shares on the market over the next 1 to 2 years, right? Which could create, obviously a big major seller in the market when you're talking about somebody that owns many, many millions of shares of Salesforce stock. And so that could definitely be a major concern that I think people need to factor in for the stock price. And I think that's something Wall Street's looking at. And they're like, oh boy, this guy's leaving and he owns this many shares. Who's to say he's not going to dump a ton of those shares over the next 1 to 2 years, right? Not just that. Dig a little deeper. Brett Taylor, who we just talked about, who's also leaving the company, right? So he owns over 1 million shares of Salesforce stock. So you have 2 guys that own a collective, easily 4 million plus shares leaving the company. And like I said, when folks leave a company like this, executives, it's highly likely they start dumping shares, if not their entire position of those stocks, especially when it comes to some of these folks that, Brett Taylor got brought over to Salesforce because of an acquisition. Stuart Butterfield got brought over because of an acquisition. And so I would say it's a decent probability that these guys dump millions of shares of Salesforce stock over the next 1 to 2 years on the market, which puts immense selling pressure on top of already a tough environment for this company and for the stock market in general, right? And so that matters in a very significant way. Now, in regards to Salesforce, because I'm doing some digging on this one because I'm trying to figure out maybe this is a great opportunity for this company, right? Stock's down huge, valuation's starting to look attractive for the first time in quite some time. But the main thing I'm trying to figure out with Salesforce is analysts have them doing record numbers in 2023, but not just record numbers, not record numbers by quite a bit. Analysts on average have the company growing revenue 17%. And I'm trying to figure out, is that realistic? Because that matters in a significant way. Because if I'm running my projection several years out, is a big difference between if I'm running a 3% growth rate for 2023, or a negative growth rate for 2023, or a 10% growth rate for 2023, or 17%. 17% would be pretty incredible numbers for this company in 2023, and especially given what they said on the conference call, which I've already listened to the Salesforce conference call once, and then we're going to listen to it inside the private stock group tonight, inside the Discord chat, and we're gonna listen to that together, and we're going to break down that conference call. But one of the important moments in that conference call was when they started talking about the sales process and sales cycle being at a slower pace, right? And some of these deals taking longer times to come to fruition, right? And things maybe having to get approved from folks that are higher up the ranks than is usually out there. And so that creates a big dilemma for a company like Salesforce, and it creates dilemmas in other stocks. Like if you own Palantir stock, for instance, this could create a problem for Palantir. In all these companies that have to sell a product, right? These B2B products, the sales cycle can become much slower. And so some of these growth rates in 2023 that are expected from analysts aren't just going to be hit because the sales cycle is likely going to be so slow for countless of these companies, okay? Because now, to get approval, it has to go to the top sales manager or CFOs or some even CEOs of these companies. And to go all the way up the hierarchy of a major company, and then to get that approved, it's tough because then the CEO or CFO is going to come barking down like, why do we need this? Then you need a whole game plan on why we need this, and why isn't there a better option? And it slows down everything. If you know anything about the bureaucratic process of companies, it slows down in a major, major way. So that's a big thing I'm trying to do before I start stepping in this stock, is really trying to figure out, are these numbers even remotely realistic? Or are these kind of a planet pipe dream? Let's call it that, okay? Next up here, Tesla, my Esla. So stock down another 6% plus here today. Stock's down 54% year to date. It's been obviously, a tough one to be a Tesla shareholder this year. And I think it's been a really tough year to be a Tesla shareholder for a lot of folks, not just because the stock's down 54%, but because this company has had amazing numbers the whole dang year. I mean, you look at quarter after quarter after quarter, they were extraordinary numbers this company put up in terms of revenue numbers, margin numbers, EPS numbers, everything. It was extraordinary. And after a year of great numbers for Tesla, what do we have to show for it? A negative 54% move in the stock price. After all those great quarters and after all those great numbers, right? In record quarter after record quarter after record quarter, and what we have to show for it as Tesla shareholders are negative 54% this year, okay? Now, in terms of a more recent problem here, okay? Tesla's reportedly planning to cut production at its plant in Shanghai by 20% amid lower demand for Model 3 and Model Y in China. News outlets including Reuters and Bloomberg cited people with knowledge of Tesla's plans to scale back production, but the EV maker has officially denied the claims, calling them untrue and labeling them as false news, without adding further explanation. A cut in production would be the first time that Tesla willingly scaled back production of one of its plants. Tesla reportedly delivered 100,000 EVs in November, according to its China Passenger Car Association. So here we are. We reportedly have these, these folks of knowledge of Tesla's plans coming out in kind of leaking news here that Tesla's planning on scaling back production, with the company, saying it's false news. So we don't know what to believe there. It's an up in the air situation, okay? Let's call it that. But it's not like it's impossible to imagine, right? The upward trend of Tesla shipments is clearly undeniable, but Bloomberg reports there are a number of signs indicating Tesla is making more cars than it can sell. The first are price cuts of up to 9% for some models in Shanghai. Then there are additional buying incentives like insurance subsidies from Tesla. The company is also reinstating user referrals for more discounts. And the last sign is a shorter delivery time for buyers domestically produced Model 3 and Model Y. Yeah, I mean, those are hard things to, even as a Tesla bull, right? Those are hard things to deny. At the end of the day, those are factual-based things, right? And if Tesla really had incredible demand. We know what Tesla does when they have incredible demand. They don't have all these extra incentives and they don't drop price and things like that. Like at the end of the day, Tesla's a corporation, just like all other corporations. They want top dollar for their products. They start doing all these incentives and discounts and things like that when obviously business is in a struggling place, right? Of course, these indicative signs alone don't mean that Tesla indeed has a demand problem. But when taken together with the increased pressure that Tesla is now seeing from rival EV makers in China, the rumors start to sound at least a bit more plausible than Tesla is making them out to be, okay? And I think that's just one problem. Because here's a bigger problem I see, okay? You know, China's an important market. Asia in general is a super important market. But you know what else is a super important market? The United States. And the huge backlog Tesla had going into 2022 is not there for 2023. And now at this point in time, if you want a Model 3, you got a Model 3 right away at this point in time. So clearly there's no backlog in the United States of America for Model 3 anymore. And Model Y, if we went back a year ago, 12 months ago, 18 months ago, the demand for Model Y was so insane that, you had a dream of being able to get a Model Y in like 6 months from now, 12 months from now, 18 months from now. It's not like that anymore. You want a Model Y, you get a Model Y now. So which clearly shows that the backlog is gone now. And Tesla's basically counting on new orders coming in to fund any sort of growth, right? And it's a 180-degree difference of where Tesla's at going into 2023 versus 2022. Going into 2022, crazy big backlog. Going into 2023, backlog is not there at all, okay? Model S Plaid, which is one of my vehicles, you can get it right now. There's no problem to get a Plaid. They'd be happy to sell you a Plaid. They're like, please take them from us, man. We'll get you it right away. We'll make it right off the factory line right now. You want it? You can get a fresh burger in that baby, okay? We'll give it to you now. As I always say, Google Trends is our friend. Also another, I think telltale sign here is the Google Trends for Tesla vehicles is definitely going down from where it started out this year, right? And I think big part of this is inflation pressures. I think a huge component of it is consumers not being in a as good of a place. I think a huge component of it is loans being in a worse place. I think a huge component of it is, confidence being lower. And when it comes to new homes, new cars, a lot of those purchase decisions come down to confidence, right? As well as money. And, we're just not at a good place or even close to it in terms of the Google Trends data. It's clearly in a deteriorating place as far as Tesla Model Y goes in Google Trends. Tesla Model 3, same exact thing. We started out this year at a 56. We're at a 38 now at this point in time. So Google Trends is our friend. And if it's telling us something, I think it's important we at least look at that, along with all the other signs we're getting out there that demand is not super strong right now by any stretch of the imagination, okay? Now, as a Tesla shareholder and somebody that's owned this stock for many years, how concerned am I about 2023 numbers? On a scale of 1 to 10, I'm a 10. I'm the most concerned you can be about numbers for Tesla in 2023. There's no doubt about it. I would put myself at a 10 as far as EPS and a 10 as far as revenue. I think if this company grows revenue 20% in 2023, it's a miracle. And I will be a happy shareholder. If they just grow revenue at 20%, I will be the happiest shareholder in the world, because that would show an amazing feat. I think analysts are going to have to come down massively on their revenue projection of 40% for 2023. I think it's going to be dang near impossible for the company to grow revenue in 2023 at 40% clip. I hope it happens. As a Tesla shareholder, I do not think it's realistic whatsoever. And my concern is a level 10 in regards to 2023 numbers in regards to Tesla here. No doubt about it, okay? And you got to look for more data than that. You got to say, like, what is the big dog? What is the big dog scared? The big dog is frightened. And that's the best word to use it. Elon Musk is frightened. This was a tweet that came out just a few days ago from Elon Musk. He said the Fed needs to cut rates immediately. They're massively amplifying the probability of a severe recession. Elon Musk is scared as crap. Here's the thing, okay? Let me ask you this question. I think it's an important question. Do you think Elon Musk looks at order numbers every day and every week? Or do you think he just like, no, I don't look at that? I guarantee you, Elon Musk looks at Tesla order numbers coming in on pretty much a daily basis and certainly a weekly basis. There's no doubt he's not keeping informed. And what he's likely seeing right now is he's likely seeing weak order demand. I almost guarantee you, and everything lines up about that. Google Trends lines up about that. The fact that you can just get a vehicle now, no problem. The fact that they're starting to do incentives, everything lines up like that. And when you have Big Dog tweeting that the Fed's are going to wreck the economy, and why is he doing that? If orders are coming in like crazy for Tesla, and they were just like record numbers, and the backlog's just growing big and it's incredible, believe me, Elon Musk would not be tweeting that. Elon Musk is scared. Elon Musk knows that the Fed is doing massive damage to the economy, and demand for especially loan-related products like homes and like cars is going down in a substantial way. And it's going to pull down the entire economy in a major way. And I guarantee that man, he doesn't keep his head in the sand. I guarantee you he's watching the numbers come in and he's like, it's not there, okay? Now, with all that being said, Tesla obviously has a tremendous long-term opportunity. And so for folks that haven't been able to build big positions in Tesla stock and might want to, you're going to get your opportunity in 2023 to probably buy that stock for, I don't want to say the entire year, but probably much of the year at heavily discounted prices, because they're gonna have their work cut out for them in the biggest way possible in 2023. They're not going in with some gigantic backlog behind them this year, and we know it's a way tougher environment going into 2023 than when we went into 2022. It's like night and day difference between where consumers are at, debt, the Fed, I mean, inflation, like everything's at a much different place, okay? And it's all working against Tesla. And so yeah, I'm even likely going to step in and buy Tesla shares in 2023, which is the first time in years I've been able to do something like that, okay? Now, this is a scary layoff here, but I think it's very telling. PepsiCo announced they're going to lay off hundreds of workers in their headquarters. PepsiCo? PepsiCo? What? This almost smells like companies just looking for reasons to start laying off employees. Like, think about PepsiCo. This stock is at almost all-time highs, pretty much all-time highs. The business has performed amazing. It's been great business performance. And yet PepsiCo is saying, yeah, we're going to lay off, a ton of our corporate employees. Wow. I think that's very, very telling. And I think that shows just how likely willing companies are over this next 6 to 12 months to cut employees at any chance they get, just to be quite frank, okay? Snowflake, this stock was down another 9% plus here today. At the end of the day, when it comes to stock like Snowflake, obviously good company, impressive company, but they have two core problems working against them: valuation and growth compression. Not a stock I can even consider, to be quite honest. Maybe in a year or 2 years from now or something like that, it might be a different situation. But right now, no. And the thing you got to understand about Snowflake is, can that stock fall another 50% after it's already down 60%? Yes, absolutely. It can fall another 50% from here. There's no doubt about it. If they start to miss some of their growth numbers, it's lights out for a baby like that. They still have valuation problems, even as much as the stocks come down, okay? U.S. vehicle sales came in. They fell 6.5% month on month to 14.1 million on an annualized basis. Adjusted sales volumes were 1.12 million units. That's 10.4% above year-ago levels. The average selling daily rate was 44,000 compared to 42,000, which is not much of a surprise given inflation, right? Declines were primarily concentrated in the light truck segment. I think that's going to be a huge weakness for 2023, the light truck segment, because think about it. As construction starts to slow in a massive way as 2023 kind of rolls along, so much of light truck segment sales go to the construction industry. And those sales are going to just dry up in a massive, massive way. So you're getting all these telltale signs of things are deteriorating and starting to deteriorate pretty fast, okay? Some folks are wondering where the heck Santa's at. So far this month, the Nasdaq's already down 2.5%, and we're only a few trading days into the month. And to that, I'll say, Santa, he just came a little early this year, okay? So if he doesn't come again, just don't be surprised. He came earlier than a lot of folks anticipated. October 13th through November 30th, the Nasdaq went up 11%. That's a pretty big number, 11 percentage points during that time. So you got to understand, Santa might not come in December because he already came in this time. And this was just before a lot of Wall Streeters were anticipating it, right? So this is something to just keep in mind in regards to the whole Santa thing, okay? Now, in terms of a stock I bought here today, okay? It's a stock you see in front of you, Target. I bought some of this stock, and I'm likely going to buy a lot more of this stock in 2023. This is a stock that I sleep well at night, holding a stock like Target, right? Profitable beast company that's just, they've done a phenomenal job running their business over the years. They've obviously had a troublesome last, let's call it 9 months. But my opinion is they turn that around in 2023 based upon their long-term track record. I try not to judge a company just based upon one troubling year, and they're not the only ones in the retail space. It's been almost everybody, right? And this is a position that is my smallest in the dividend-only account right now, which has held up incredibly well in this market. And so Target will likely be a position I build much bigger. And don't be surprised if this is a position that eventually is $20,000 to $40,000 in the dividend account over time. And that's before it starts to go up, okay? Now, in regards to the stock I'm doing a lot of research on right now, and I'm way down the rabbit hole on this one, AMD. This is one I'm having to dig in here. AMD, especially after their Xilinx acquisition there, I'm trying to do as much digging as possible on this one. The stock's obviously off significantly. The valuation metrics are very compelling now at this point in time. And this is a great company for the long term. I'm just trying to figure out where do I start to step in this one, and is it 100% sure? I'm like 95% sure this is a stock I'm going to start buying, but I got to do a little more valuation running in number projecting out for this one and kind of what my expectations are for this one. But I'm way down the rabbit hole on AMD. In regards to Apple, so this is announced pretty much over the weekend. Apple makes plans to move production out of China. The iPhone maker is looking to further diversify its supply chain that has powered its growth. And something important to remember in regards to this situation is, one of the biggest reasons Apple's been able to grow into such a massive beast over the past 10, 15 years is because their system they've had set up in China of producing their products at very affordable rates, let's just call it that, and their supply chains being perfect. If they're talking about moving everything around, you just got to understand it will eventually hit margins. No doubt about it. Or, now if they raise price substantially, which can ultimately impact, obviously, sales numbers in a substantial way, especially if they're doing that into a worse consumer environment, okay? And so that's something very important to keep in mind with in regards to Apple there, okay? Hope you guys enjoyed today's video. As always, I appreciate you all joining me. And if you're looking to join our private Discord chat, my private stock group, get access to anything like that, check out the pinned comment down there. It will also be linked in the description for access into any of those chats or things like that. Much love as always, and have a great day.